Hey, Darren, you're first. Feels like feels a lot like New Year's Eve or something. Feels like a holiday here. Um, I'm probably can only be on for about an hour, so I'm not going to link up with Ham right away. I have to go to lunch. I have a lunch appointment. When I get back, I'll go live with Ham. That's that's my plan anyway. Um, we'll see how it goes. But I did want to recover from Novak Djokovic losing this morning. This guy Opelka or whatever his name is, what a service! What a he, he looks like a basketball player. But I was hoping Djokovic could have won the Brisbane. But anyway, Railtown is down 3 cents today on you know pretty decent volume, but not a lot of volume for the last many days. Um, I continue to think that if that breaks out, I'm looking at a chart, a small chart, of course, and we can talk about it. But depending on how you want to count it, in a major way, one, two, three, and now this is a fourth test, or it's if you want to ignore what happened earlier in the year, this is just the second recent test of basically 39.40 cents. If it breaks through there, I think that stock, the chart looks great. It's going to go higher. Um, Nixie is very sexy. It's 576, 585. I completely, I guess, was cautionary on that prematurely, maybe, because it really didn't have it, it went sideways maybe for Christmas and New Year's and Hanukkah and Kwanzaa. But it's intriguing right now. If it were to pull back now a little bit, or Monday or Tuesday, you could still argue a head and shoulders pattern and it could get down into the threes. But I'll tell you what, with today's action getting up, low volume, but getting up almost to six, I don't know. I don't know if Nixie's going to have a real pullback. Such is life. And then this NTRP is also behaving extremely well today, low volume. So these might be indications of what could happen, but maybe they're head fakes. But next trip is up, NTRP, and that chart is just basically vertical, not vertical, 45-degree, but straight up. It's pretty amazing. And then you've got finger motion is up 4 cents at 122. Looks pretty good. MLSS is up. And Ham's G-Bucks, his G-Bucks that he went in, has had a high of 172 today. And that's the 52-week high. And I guess he called that one correctly. But anyway, I wanted to go over something with you. Which thrilled me to find this morning. Let me see if you can see it. When I started my career, such as it is, I trained at Merrill Lynch, Pierce, Fenner, Smith, and Bean. It wasn't Bean back then, but some of my clients remembered that it was. But it was Merrill Lynch, Pierce, Fenner, and Smith. And one of the guys who was the eminence grise, the rock star at Merrill Lynch was a guy named Bob Farrell. And let me go over to his page. Bob Farrell and his 10 investment rules were discussed. Who is Bob Farrell? Oops, what's going on here? Who is Bob Farrell? And where are these rules? This is by Lance Roberts today at realinvestmentadvice.com. And he's young, so he doesn't remember Bob Farrell. I do. I listen to him every day, sometimes at the end of the day, during the day, and to my memory, he came to our training classes. But that was a long time ago. Who is Bob Farrell? Where are those rules? I often forget how old I've become. Well, maybe he's my age. Why are Bob's rules so important? The downfall of all investors is greed and fear. Investors repeatedly fail to sell when the market peaks, nor do they buy at market bottoms. And this also applies to the people giving you advice, which is why so many brokerage firms promote buy and hold strategies, because they don't want to, or don't know how to manage portfolios. While buy and hold strategies work well during trending bull markets, they can be devastating during larger corrections and bear markets. All right, so who was Bob Farrell? He was an old guy, 50 years. He got his master's from Columbia, and he was a technical analyst at Merrill Lynch. Wow, old. In 1957, he started. It's a long time ago. Even though Farrell studied fundamental analysis under Graham and Dodd, he turned to technical analysis as he realized there was more to stock prices than fundamental analysis. And here are his 10 rules. He lived to tell about it all. Markets tend to return to the mean, the average price over time. And this is what I would suggest could happen with the Mag 7. But let's read what he says. Like a rubber band stretched too far, the rubber band must be relaxed to be stretched again. The same is true for stock prices anchored to their moving averages. Trends that get overextended in one direction or another always return to their long-term average. It's like baseball statistics. Even during a strong uptrend or downtrend, prices often revert to the mean. They often return to a long-term moving average or trend. The chart below shows the S&P 500 versus its bullish and bearish trends. Even during strongly trending bull markets, and he's talking secular there, markets revert regularly to their underlying trend. The difference between a bull market and a bear market is when the previous trend is reversed. So anyway, in 96, which probably some of you remember, and that's when there was a bull run. I'm trying to remember. I started a investment bank small, but we were boutique in London. And we did well. I learned a lot. And I think it was right then. And there was a bull market. Then there was a bear. But what capped this was the technology run, the high tech run. And I invested right here, 2000, in the beginning of 2000. I put a lot of money in. And then the bear hit. But one thing I did, I was down almost immediately, but one thing I did over the next 6 to 8 months is I sold calls against all my stocks. I did it short term. If I got called away, I reestablished and I made all my money back over the next period of time just by selling premium. Anyway, then we had a bull run from 2002 until Barack Obama became president. I don't know if that was his fault or if that was the Fed. I don't know if it's the massive amount of spending and stimulus that George W. Bush, the conservative, spent. But then we had we just had a crisis in real estate and in everything. Companies went out of business. And so from 2011, the Fed and the markets, Obama didn't arrest any bankers. He didn't question anybody. He was no FDR. And we've been on a spending spree that has been incredible. Can it keep going? Sure. But I think we're going to have a blow off top soon. So anyway, from 2009 or so, we've just been in a bull. Recently, there was a correction that scared me. Could we just have another one of those and keep running? I don't think so, but we'll find out. The next chart shows the percentage deviation of the market's current price from the 52-week moving average. During bullish and trending markets, there are regular reversions to the mean, which create buying opportunities. However, what is often not stated is that investors should have taken profits as deviations reached historic extremes. And so often nobody does. And it's hard to do. Conversely, in bearish trending markets, reversion from extreme deviations should be used to sell stocks, raise cash, and reduce portfolio risk rather than to panic sell at bottoms. The current deviation of the long-term mean is at levels which suggest investors may be, my dad hated that terminology, may be best served in becoming more risk adverse in portfolio allocations. Weasel words. You should be. But I think we are going to have this rally, but we're getting long in the tooth. Deviation above, below long-term mean. We're in the red line. But notice it's gone higher in the past, and it could still go higher. Okay, Bob Farrell's rule number 2. Excess, and this used to be printed out. We used to have this. Excesses in one direction will lead to an opposite excess in the other direction. And what pops to mind to me is oil and gas stocks, exploration and production, and mining shares, gold, silver, and others. They're so negative right now. They can snap back and then go to an extreme to the upside as well. But anyway, let's read this. Markets overshoot on the upside. If they do, all right, I may have to leave. Hang on. Hello. Hey, how are you? I'll talk to you. I have to go. So we'll do this in about 2 hours. But let me get my shoes and I'll talk to you while I put them on. Just hang on 1 second. She called an hour early. So what was meant to be a sort of a 1:30 has become a 12:30. And I have no choice but to do it. So we'll come back on this afternoon. Thank you. I'm not going to hang out. I'll try to go through these quickly. You like liposome, LPSN. Who'd have thought banks have been used absolutely. Did our gold company? Not yet. Not yet. It's expected. It could be today. But I'm, since today is mostly over, and since banks make money holding money, I told the company I thought it would be Monday. And I'm excited. Once that happens, I'll be able to have, once it's received, and I don't think the company needs to give me permission. Once it's received, settled, there's a couple, 2 or 3 people that want to add money. I'll follow up on that. I can have a group conference call. I can't wait for that. I'll bring you some good news back. Good day. Carnegie's Painter. Happy New Year, Carnegie's Painter. All right. I'm going to go, and we'll see each other this afternoon. Cheers.